Check Podcasts. Hi, I'm Bruce Williams. I'm the Chief Executive Officer, the CEO of the Greater Victoria Chamber of Commerce. Welcome to Chamber Chats, as always coming to you from here in the podcasting facilities at the Czech Media Group, one of our chamber champions. I'd like to acknowledge, as always, that I live and work in the ancestral lands of the Lekwungen-speaking nations known to us as Songhees and Esquimalt, or Cosapsum. And Chamber Chats is made possible by the support of Island Savings, a division of First West Credit Union, who are redefining what banking can do for people, for community, and for the world. And one of their professionals is going to join us in a minute. I'm going to use a couple of trigger words here for you right now, okay? Wildfires, tornadoes, floods, elections. All of these things are things that kind of disrupt our world all the time. You might get a little bit of a heartbeat change when I say those kinds of words when you think about them. But what's the impact of that on your income, on money, on investing, on the markets in the world? How do those things disrupt all that? We're going to talk about that today with two professionals. One of them is Yohaan Thommy, who is a partner for performance improvement and value creation with MNP. Yohaan, welcome. How are you?
Thanks. It's lovely to be here, Bruce. Thank you. I'm doing well.
Also joining us today is Manny Dago, who is a senior wealth advisor with our friends at Island Savings. Manny, how are you today?
Doing well. Thanks for having us, Bruce.
Okay, Yohaan, I want to go back and start with you. So all of these things that we're seeing that are disrupting our culture, what's the general feeling about sort of economic stability and risk and that sort of thing when you're helping people work with their money? How do all of these things impact that?
Bruce, I think that the degree to which change is impacting business, we've never seen this much change and these many variables. To some industries, it's a good thing. The disruption's presenting opportunities. To others, things are changing very quickly. I mean, take for instance the construction industry. 3 years ago, booming, was doing very well. Everyone was constructing. Everyone was looking for, their next space. There was limited office space in this country. We needed more industrial space. Today, a lot of businesses, well, they're actually dealing with one of the highest insolvency rates and growth rates in the country. So much has changed in 24 months. And so having your finger on the pulse to predict what's going to happen, even in as short as a year, 6 months, is so critical today than I think has ever been before.
Yeah. So, Manny, same kind of thing when you're dealing with your clients and people that this disruptions of climate change, wars, all those kind of things. What are you seeing day to day?
Yeah, what we're seeing day to day is the overall sentiment, general feeling is there's not a lot of optimism happening right now. And so um, we're at a point where, economic activity has been, surprisingly resilient, looking at the official figures, but the sentiment does not match that. So this has got us to the point where people much younger and cooler are noticing that the vibes are off, but the economic stability appears to be there. So they're naming this the vibe session, which is we haven't entered an official recession yet, but it certainly feels like one.
Yeah, and Manny, there are people, of course, that are still pretty confident, right? I mean, where are you feeling and sensing confidence from people?
Well, looking at the capital markets and in the world that we advise our clients, um, the results have been remarkably positive over the past couple of years, even though sentiment has been quite poor during that same time. So there, it's a bit of a disconnect between what is happening in the quarterly statements versus what we're all feeling and dealing with on a day-to-day basis with the pressures that we're experiencing financially.
Yeah, we're going to get to more of the doom and gloom shortly. But Yohaan, can we talk about that again with you for a second? Where are you seeing some sort of optimism or confidence right now?
Seeing a lot of confidence in industries that are growing really fast and that can still grow really quickly. There's been a lot more, and the capital markets in this country has changed quite a bit. So in the last 2 years, family offices, private equity, there's a lot more money flowing from those capital sources, and those capital sources can be they're very interested in companies that have high growth. Obviously, they always have been, and the quantum of funding available there has been great. So if you're if you've got an interesting product, for instance, if in the food space and it can grow really quickly, I think the world's going to be your oyster in a lot bigger of a way than it has been. But if you're selling a commodity product which cannot toothpaste, right, which isn't going to grow by 15-20% a year, well, it's getting harder to fund businesses like that. There's less money out there. That's the perspective I'm seeing in the marketplace.
And without oversimplifying this, where are the strongest concerns right now, Yohaan? Where are they coming from?
It's interesting. In preparing for this, I was looking at segments of the business that have the highest insolvency rates: mining, quarrying, oil and gas extraction. The last 12-month period ending insolvency rates are up by 80%. Construction up by 47%. I get this data from the Office of the Superintendent of Bankruptcy. Manufacturing is up 56.7%, and what that means is that 24 months ago there was about 328 businesses that either declared bankruptcy or went through a proposal. Today there's 514, so 56% increase. Wholesale trade, retail is up, bankruptcy rates up about 32.6%. Transportation, warehousing, capital intensive businesses, like transportation, are an issue today with the borrowing cost up 76.1%. So, we are seeing industries like that being heavily disrupted. Industries that aren't being heavily disrupted are agriculture. The net increase in insolvency rates is much lower than the rest. And it's interesting, just to piggyback off something that Manny said. When we look at overall, the insolvency rate in Canada has gone up, per the Office of the Superintendent of Bankruptcy, about 56-57% on a 12-month trailing basis. But when you look at the consumer proposals, right? So this is non-business debt. That has now increased by 79% as of the June report online. So I think when Manny talks about the vibe recession, yeah, it's very real.
And Manny, same kind of question. Where are you getting really strong alarming signals from anybody, any sector in particular right now?
Not really, Bruce. So we are seeing a lot of a lot of the concerns from just about everybody. So dealing here in Victoria with our local members, both personal and business. Yeah, the narrative that we're hearing is a lot of the impact of increasing costs affecting our consumers' abilities to spend and really having to tighten their belts. And that also impacts our business members in their ability to reinvest into their operations and expand. So it's been a little bit of a, I'm sensing more cautiousness locally, but that does vary from sector to sector.
Yeah, we at the Chamber have been talking about the good side to the interest rates starting to come down, because that means that businesses and operations will have more of their own money to reinvest in what they do. So that's been a part of this whole disruption. We're going to talk about interest rates next. Chamber Chats today, we are talking about disruptions in our world, everything from wars to elections to climate change, all of those things. One of the interruptions that came along was inflation and the rise in interest rates that had to accompany that in order to get it all under control. Manny, I'm going to go back to you and start with this. Interest rates, what's that doing to your client base? Go.
Absolutely. Apart from the obvious, which is just we're all sensing it and feeling it day to day. Interest rates and really the inflation that caused interest rates to go up have really impacted capital markets over the past couple of years. So we're just starting to see things hopefully trend in the right direction and stabilize somewhat after almost 2 years of challenging times. But again, after 2022, where all types of markets had to readjust to a much higher interest rate environment in a really, really sudden change. Um, Now we're starting to essentially be able to look forward and look past and prepare and plan for the future.
Yeah, Yohaan Thommy at MNP, interest rates again a factor of life every single day still, even the fact that they're going down, but they're still uncomfortably high for a lot of people, right?
Yeah, they are uncomfortably high for a lot of people. I agree completely with what Manny said. Maybe I'll just present the flip side of the coin. Just before this, I was on with a client of mine in the grocery distribution business, and I said, "Hey, how's business? I hear it's really tough because we have other clients at the firm in that space." And he said, "Amazing." He says, "My business is growing," and I said, "That's the exact opposite to what I'm hearing elsewhere." And then we actually got to talking about his capital structure, and he said, "Yohaan, I'm flush with cash. I'm not borrowing, and I'm actually picking up on opportunities that other people cannot take advantage of." And I want to link this to interest rates have such a massive impact on, I think, how people are feeling about investment, how people are feeling with growth, and then their propensity to take on more risk. And so, folks that have a little bit more room in their suit jacket and can kind of stretch a little bit uh, are actually taking advantage here and using it as an opportunity to finance growth when some of their competitors might be a little bit more hesitant or more risk averse. And I see Manny, nodding his head there. So I do see that as a little bit of a silver lining, where if you can take a little bit more risk, there's some opportunities to grow despite the disruptions.
Be interesting, anybody, if you've got the time to look into the great crash of 1929 when the stock market collapsed. The factors that were in play there was many of them. It was a perfect storm that all came together. Interest rates was a part of that, though. Even at that time, overproduction, panic selling, all that stuff came together. How does that compare to today? So that question, Manny, what's your take on that? That like compare now to 1929?
I would say there are similarities to what happened in 1929, but there are also significant differences. And so, what I mean to say is, leading up to 1929, we saw um, stock market frenzy that perhaps was not following fundamental research. It was almost like trading or momentum type of trading that sort of took on its own life. And so we did see things like that, especially during the pandemic, where we experienced certain companies with having drastic price appreciation in their stock price without having any fundamental business reason for that to be the case. But that has normalized and things are looking a little bit more uh, more rational, for lack of a better word. But it's interesting. Conditions look challenging right now depending on which perspective you look at. But I think you can look at any decade in history, and to me it seems like an absolutely scary environment to invest in. So for example, going back to the 1960s, you have tremendous civil unrest. You have a very close call with nuclear weapons, U.S. presidential assassination. Um, I look back at the geopolitical tensions at that time and almost consider myself lucky to be invested today.
Hmm.
And history has uh, proven, or it has demonstrated right now, that the disciplined investor will be rewarded and does not rely or depend on stable economic certain conditions in order to reward investors. So yeah, I am more optimistic than perhaps my earlier comments said on the investment front. I feel like we've got opportunities, which is a great place to be.
Yeah, I mean, Johann, 1929 was an entirely different world, a whole different economy. It was just a whole different scenario, right?
While the world's gotten more interconnected, I think that being in Canada and having some semblance of a stable political system, and a stable economy cushions us a little bit. And I was just in Europe recently, and it's interesting, as Canadians here, we know about the war in Europe, but it's a lot more of a real reality for them, right? The U.S.'s stance on NATO is a lot more of a risk for them. I mean, it's something I think about, but it's not something I think about all the time. And when you think about, I think, our best product and our best export as a nation, and this coming from a person that has lived in 4 countries, including the United States, the United Arab Emirates, and India, there's a level of political stability here right? That I think is going to be a lot more valuable and a lot more cherished to wealthy individuals and business owners looking to cushion themselves a little bit from some of the geopolitical risks that Manny mentioned. I do think that tough days are ahead for Canada with some of these issues, but I do think that Canada is a little bit more cushioned from it, relatively speaking, making us a better place to be at, right, during some of these disruptions.
Absolutely. So, one of the disruptions that's very obvious to us all the time, ongoing, is the element of climate change, which has an impact on the investment world as well. We're going to talk about that next. We're talking today about the disruptions in our world between wildfires and climate change and wars and elections and all that stuff with a couple of people. Manny Dago is a senior wealth advisor with Island Savings, and Yohaan Thommy is a partner in performance improvement and value creation with MNP. Manny, I'm going to start with you. Climate change, fires, floods, winds, all that stuff. How is that impacting the world of investing and how people are getting returns on their money?
Yeah, it's a huge disruptor. Obviously, going beyond the tremendous impact of uh, locally in areas that are affected. We're starting to see changes or a different approach in how we have to sort of manage investments and put portfolios to reflect that. So the obvious first um, I think change is regarding insurance and premiums and how seeing how insurance companies are now adapting and adjusting to a new environment where historical data is no longer going to be relevant or as relevant as it has. So yeah, we're all feeling increased premiums in different types of insurance, and some of us are not e- not even able to hold coverage in certain areas as insurance companies adapt where they don't cover. So um, it definitely impacts the investment world and the amount of due diligence and research that has to be taken in order to analyze other risks that previously hadn't really been um, properly addressed.
And Johan, you mentioned about the relatively calm political climate in Canada compared to other parts of the world. But we look at places like India. France and Germany have gone to the right side, extreme right in their politics. Turkey is pretty much a dictatorship. Other countries in the world have that situation. How do those kinds of political circumstances impact us and our money?
I think it drives more investment into Canada. I mean, if any of us have been to Hong Kong, for instance, right? The amount of Canadian flags that you see and the amount of immigration that came in from Hong Kong in the 90s and the 2000s, because they were hedging their bets, right? And I think that tremendously helped our economy over here. Um, I think that the more global instability we see, I think the better it is in terms of foreign direct investment into Canada. Going into climate change, it's interesting. I thought Canada took a good leadership role in investing and creating opportunities for climate change investment and kind of leading some of that new climate change economy. However, I was disappointed to see what happened federally over the last 6 months with the capital gains changes. And I look at that, and it does not encourage venture investment into Canada. I have friends that run climate change, clean tech companies, and it's interesting. They're telling me, Johan, the investment is from the U.S. has dried up. We need to now move to the U.S. And so I thought Canada had a real opportunity to lead in that area, but we've got to figure out just a more suitable environment and friendly environment for capital to come into those companies and actually invest those companies. We don't want to happen to the telecom industry with us creating BlackBerry, but us losing all of that economic wherewithal to the U.S.
Yeah, I mean, it's good for the planet to take care of those things and mitigate climate change, but it's good for the economy because it makes things grow a little bit faster too, as well. Things that we think may not have an impact on us really do. Manny, tell me about what the impact of the Russia Ukraine conflict has on us here, monetarily and fiscally.
Well, that the invasion really was a strong catalyst to getting inflation to pick up steam. So as a result of that, we saw the cost of energy increase, we saw the cost of
Mhm.
food increase, and that really got the wheels turning on the inflation that in the months after that continued to trend in the wrong direction. It spiraled out of hand. So I would say that is a conflict where um, the, the tentacles spread fairly wide and fairly quickly. In terms of risks today, the obvious ones are of an escalation of tensions and getting different parties involved in the mix there. But aside from inflation, I would say the direct impact has been quite muted, which may have surprised some.
So, in the face of all of these disruptions and things that we're going through, Johan, I'll ask you this: how can we prepare ourselves for this going forward? I mean, if we're in the middle of it now, that's one thing, but we know there will always be disruptions. What can we do to better prepare ourselves?
I think strategy and looking ahead and scenario planning has never been more relevant, right? So, thinking through the 4 or 5 likely scenarios and its probable impact on your organization and your business model, it is so important to start mapping that out. And not just looking at it to say, well, how does it impact profitability, but how does it impact cash flow? How does it impact financing? How does it impact operations? And I'll give you an example, right? So David, that sport jacket that you're wearing, I assume it's a sport jacket. So that sport jacket that you're wearing, right? Maybe that sport jacket comes in from the Ukraine, right? And you only had one vendor, right, internationally, and it did really well. Well, now because of the war, it might take 20 more days to get it shipped over to you. Well, that's going to impact your cash flow. That's going to impact your financing, right? And do you have additional financing costs to survive that, or do you have to look for a secondary vendor? You don't want to. You want to be able to support, your Ukrainian vendor with everything going on. So I think part of that is mapping out some of these scenarios, mapping out things that may happen, looking at your supply chains, looking at how you're funded, looking at where your customers are, thinking about innovation differently, and actually figuring out how it's going to change your business model.
You know, all of this stuff today proves the importance of having a professional person take care of your finances and guide you with what you do with your money and your business. And these two today, amazing examples of that. Yohaan Thommy is with MNP. Manny Dago is with Island Savings. Gentlemen, thank you both for being here today. We appreciate it.
Thank you,
Thanks
Bruce.
very much.
Manny.
You bet. I'm Bruce Williams. We'll see you again for another Chamber Chat.